Let's talk about the CPI report. Here's what you need to know before the bell. CPI report out this morning, and expectations are a little bit kind of all over the board. Ranges are from a 0.5% increase all the way down to flat, so basically a no increase at all. That brings you a wide range of potential outcomes for the markets, and something that, you know, every kind of inflation report we look at this is expectation for market ranges based on the CPI report. And this is how silly this whole thing has become. We're all just becoming bettors against what the CPI report's going to be. It's almost like trading places with Eddie Murphy, where they're betting on the outcome of the orange futures contract. So here we go. This morning, the two things are going on. The CPI report, if it comes in very hot, so if it comes in at 0.3, 0.4, 0.5, you're looking at a potential decline of up to 1.5%. That would bring the market below the 20-day moving average if that would occur. Anything closer to a zero print, 0 to 0.1 to 0.2, potentially looking at either a retest of recent highs or a solid breakout rise of at least 1.5% if it's closer to zero above the recent highs. So again, the market's going to kind of make a move to the upside. This would not be surprising here, of course, at all, because we've been kind of seeing this already. We've had this consolidation of prices here over the last couple of weeks, and this is something we talked about when we triggered this MACD sell signal. We said that upside was probably limited, and that's really been the case here now for the last couple of weeks. Market prices are getting very compressed. We're trading between the recent highs and the 20-day moving average. That compression is going to break out one side or the other, and because of that very tight range, that's going to lead to a more exacerbated move to the upside or downside. That's how you're going to get that 1 to 1.5% clip in one direction or the other. This is very similar to what we saw here back in April and May when we got that last sell signal on the MACD. Markets just traded sideways for almost a month and a half, about 45 days. Finally triggered a buy signal, broke out, markets ran to the upside. So again, this is kind of the same type of technical setup that we're dealing with right here at the moment. And again, this is all going to really be kind of based upon today, at least, what the CPI report says. Kind of everybody is compressed price in anticipation of this report. So a hot reading, look for a break to the downside below the 20-day moving average. That would potentially set up an eventual retest of the 50-day moving average. A breakout to the upside would be a closer read to zero on that CPI report. If we're somewhere around 0.2, kind of in line with expectations, markets may not do a whole lot today. So again, this could either be kind of a ho-hum day, or we could see a pretty big move in one direction or the other. We'll see what happens, but eventually this compression of price is going to end in one direction or the other. If it ends with a breakout to the upside, equity exposures need to be increased. If we break to the downside, you'll have a better opportunity to increase exposure at some lower level. But that's just kind of where the market dynamics are running right now in the markets. And again, we're just all focused on this inflation report. Why? Because it will tell us maybe, possibly, what the Fed will do next. If the inflation report is very weak today, look for the Fed to maybe start edging off of their commitment to 2 more rate hikes. We'll see what the futures do today when CPI reports, but that's what you need to know before the bell.